banking seems to have gotten a fair bit of drubbing, but there are some reports, buy reports that have started to come in for select banking names. J&K Bank is one such name wherein CLSA has come out with a buy report, target of 1090. They maintain a buy on strong operational performance of the company and better, robust asset quality that the bank has displayed. Mr. Mushtaq Ahmed, Chairman and Chief Executive of J&K Bank, joins us from Mumbai to speak about what's really happening with the bank. Good having you. Thanks so much for joining in, Mr. Ahmed. Thanks for taking the time out. We'll come to the specifics of the report or a couple of reports that have come out on you as well. But just to talk about the numbers in greater detail, good performance, your margins have stayed stable, and despite the fact that the other income was flat, you've done very well on the net profit front in terms of the growth vis-a-vis how the NII grew. Do you believe that this is the kind of performance that can stay on for the next couple of quarters as well? It's probably difficult to look at FY13 as a year, but the first 2 quarters of FY13?
I think this type of question I was facing last year also, and I had just assured all the stakeholders that we will achieve the targets, the key ratios that we had given in our guidance. And you see our result that even under adverse circumstances, our net interest margin has moved up to 4%, and at the same time we have shown a profit growth of 31%. Then business has grown by 22%. My credit portfolio at the bank, that has grown by 26%. Then I think we have given another this corporate guidance that next year is going to be that J&K Bank is going to be a trillion rupees company, and our profit has to grow by, say, it has to be 1,000 crores. And as far as J&K Bank is concerned, we have thought of all the difficulties. It is going to be really a challenging year for J&K Bank and all the bank also, but we will be managing, and whatever guidance we have given, we will stand by that. We have given that our business must grow between 20 to 25%, and also as far as profit is concerned, minimum growth 25% you will see. Yes, as far as banking sector is concerned, I think it's going to be a challenging year. There are going to be issues of capital infusion. Then again, there are going to be these pressures, and asset quality, I think, is going to be posing some problem for the banks. But at J&K Bank, we are well aware of these challenges, and we will face the challenge, and we will surmount the challenge, and we will definitely come out with better results.
Ahmed, the other bit is that your CASA deposits as well as the change in asset mix is helping your margins, the net interest margin substantially, which was evident in Q4. You think there is room for further improvement, one, in how your CASA ratio does, and two, in how your net interest margins look like over the next 2 quarters?
You see, the first thing that you see, J&K Bank has added 55 branches in J&K State last year, and we have the plans to add another 100 branches this year. This is going to be in J&K State and also outside J&K State also, and we are going to some of most profitable centers. Back in J&K, when we open a branch, the branch really becomes a profit center within a period of 12 to 18 months. When we review the performance of these branches, our retail business has grown and our CASA deposits have grown. We have added 4,000 crores to our CASA base in the last year, and given this branch network, we are sure not only that we will be in a position to maintain and sustain the existing that margin level, but also we will add to CASA level, and then we will add a lot from this retail business.
What about fee income growth? That remains muted. Are you looking at augmenting that?
Well, I think I agree with you that as far as this fee-based income is concerned, the growth has been quite muted one. But at the same time, we had the priority to increase our interest income, and we have done better. So we had, and there were some regulatory restrictions last year which really restricted the growth to an extent. But we hope that this year we will be increasing our fees-based income. And the other part is that this year we will also go for working capital finance, which provides us scope for increase in fee-based income. And then also distribution of insurance, third-party products. We will be slightly more proactive on that account. and that should push up our fee-based income as well. But at the same time, when we are growing our loan book, we are quite conscious that we have to show better results. So therefore, we also expect that the current pace of increase as far as our this interest income is concerned, we will like to maintain and sustain it.
Okay, Mr. Ahmed, just before we wrap up, out of time completely, you believe a 35-40% bottom line growth is distinctly possible for you as a bank in FY13?
You see, I have given that my business must grow minimum by, say, 20%. The profit has to grow by 25%. And I think these figures we have well calculated, and we have given this after due thought.
Okay, we wish you all the best for the same, Mr. Ahmed, and look forward to talk to you post your Q1 numbers. Good performance in Q4. Thanks so much for taking the time out and joining us.